coming back to that conversation. Let's talk matters investment now. Investment opportunities come in many forms, depending on the investor's appetite for risk. And with a pro-market government, Kenyans have been urged to list their companies at the Nairobi Securities Exchange and invest in local companies that are already listed. I spoke to John Ndua, an investment associate at Genghis Capital, to understand how money market fund operates, how they invest, the risk involved, and how Kenyans can get started on their investment journey. It is no doubt that Kenyans are facing a hard economic time. And with a hard economic time, many of them are looking for solutions to grow their income. One such solution is investment. And this time we want to look at how investing in the money market can be a solution to the majority of Kenyans who are looking for an extra income. According to data from the financial result of the NSC for the year ending December 31st, 2022, the group reported a revenue decline from 714 million in 2021 to 642 million in 2022, largely as a result of reduced turnover in the equity trading business line. However, bond levies increased by 18% to stand at 79.4 million in 2022 compared to 66.9 million reported in 2021, an area of opportunity that Kenyan retail investors can explore through a money market fund. I spoke to John Ndua, an investment associate at Genghis Capital, to understand how a money market fund operates.
So money market funds, in a nutshell, is a collective investment scheme, basically a pool of capital. We float a product where we collect money from individuals. Yeah. Let's say we collect 500, 600 shillings from individuals, and then we get, let's say, 1 million shillings. Then this 1 million shillings we invest for them on their behalf, and we deliver a return. So we have two types of customers. We have retail and we have high net worth. So as per capital markets definition, a high net worth investor is someone who can actually invest 1 million and above. A retail investor is someone who can invest below 1 million shillings. Yeah. And in addition to that, it's assumed a high net worth investor is sophisticated enough to understand the risks involved. So that's where money market comes in. It's run by a fund manager who targets these retail investors who wants to participate in the returns that the high net worth are participating, but they don't have the capital. So that's where the pool comes in, where we collect money from many retail investors and then we invest on their behalf. Yeah. As a retail investor, you don't have the time or the bandwidth for you to do all that while you're doing your normal day-to-day activities. So that's the role of the fund manager when it comes to investments. So there's a wide range of minimum investment amount, but the minimum currently in the market is 100 shillings.
And just like any other investment, investing in the money market has its fair share of risks.
So in each particular category, we have various investment options that we can provide them. On the conservative side, this is bank deposit, money market funds. When you come to the moderate, here is where you have the high yield funds and other investments like, I know you've heard about Mansa X. Yeah. That's in the conservative. On the high risk, now there we go to equities, private equity, and also other private investments. So in terms of the risks involved for the conservatives, it's very low, very, very low, in the sense that it's usually backed by commercial banks and the treasury. So for such investments, if the fund is highly allocated towards government securities, that is almost 100% guaranteed. So you have to check the balance between where they are placing their money. So if it's in treasuries and commercial banks, it's almost 100% guaranteed. But the risk lies on the commercial banking side, where the bank can actually fail. So you also need to understand which banks are being invested in. Are they in the Tier 1, Tier 2, Tier 3? So Tier 1 banks, the big banks, are relatively very safe. Tier 2 are safe. Tier 3 are a bit shaky. Okay. Yeah. So you need to understand where they actually place the money on that side. When you move to the conservative side, no, the moderate, sorry. Now this is where there's a mix between the treasuries, commercial banking, fixed deposits, and also the high risk one, which are equities and such. So the mix is there. So the risk lies on the equity side. So for this one, you need to know your own investment that you have, or the amount of cash that you have. Yeah. So you don't put all your eggs in that one basket. At least for the money market, you can put a lot there, because it's basically like putting money in a bank account.
Yeah.
The difference is just you're earning a higher amount. But for the moderate, you need to diversify. At least keep about maybe 30% of your income, of your reserve in a bank, and the rest you can invest moderately. Okay. However, when you're going to the high risk, this is where now the risk of losing your money is quite elevated. And this is in equities, private equity, and other private deals. Once you enter into that space, first of all, you have to engage with professionals who understand those sectors and understand the deal itself. Because it's very risky in the sense that you can also get conned in such areas. So you have to first engage a professional. Number two, invest a small proportion of your money in such sectors because they usually generate so much return that can supplement the low return you're getting from the rest.
As we wind up our conversation, John talks me through the current money market products on offer, which are more than 20, but warns investors to exercise caution when picking a money market product to invest in to safeguard their investment.
For retail investors, what they need to know is that the capital market is developing at the moment, and you have access to the capital markets. Long ago, you could not be able to access and participate in the capital markets. Now you can be able to participate with products like money market funds and also high yield funds. With these products, you can actually invest to as low as 100 shillings, money that is lying in your M-Pesa wallet. You can actually invest it overnight and earn a small return, even if it's cents. So at least that will build a bit of culture, and you start investing casually and also subconsciously, and you earn your money. Also, be aware of the risks involved within the market. Not everything is rosy. So you need to also evaluate your fund manager quite significantly, understand the management that is working in that particular fund manager, their qualification and their track record. The track record is a really huge aspect because the industry is quite young, so you need to know if this person has been involved in any kind of bad investments previously, so that you don't make the mistake of investing with them and being a second victim. Yeah.
And of course, the rallying call there being that you need to be cautious of who you trust your funds